Let's begin with the headlines first. Petrol and diesel prices could be hiked as much as 12 to 14 rupees. Top-level government sources tell Business Today TV, certain to increase prices of commodities across the board. Sensex gains 350 points led by a rally in pharma, realty and capital goods. Nifty ends above the 17,300 mark. PSU bank stocks drag. Huge revelations from income tax raids on Hero Motocorp. Sources say 1,000 crore rupees in bogus expenses detected. Stock slides nearly 7%. However, company has denied all allegations. Centre goes all out to probe e-scooter fires. Ropes in a DRDO lab to investigate Ola and Okinawa blaze incidents. And the government steps on the gas to privatize non-strategic PSUs. More than 100 companies identified. It's a Business Today TV exclusive. Prices in Delhi have crossed the 100 rupee mark again after a 5-month freeze which saw assembly elections in 5 states. Prices have risen nearly 5 rupees in the past 7 days. Government sources have told Business Today TV that petrol and diesel prices may continue to rise going forward further despite the fall in crude till an overall increase of 12 to 14 per litre. Take a look.
Oil is on the boil again. The 5-month sabbatical consumers got is because of political exigencies is over. For 7 of the past 8 days, prices have been hiked every night. The hit on your pocket ranging from 30 paise to 80 paise every day. The overall increase in prices of petrol in Delhi till now is 4 rupees 80 paise, putting petrol over the 100 rupee mark again across metros and state capitals. Diesel, which powers the transport lifeline of the nation, is on a similar trajectory, leading to real fears that prices of all commodities will shoot up due to increased transportation cost. But the daily rise in prices leads to the basic question of how much more will the prices increase? Government sources expect the total increase could be as high as 12 to 14 rupees a litre, pushing prices back near the all-time high of rupees 110 a litre seen on November 4th last year. Interestingly, international crude prices were at around $80 a barrel when the government slashed taxes on fuel last November. The Russian invasion of Ukraine saw prices zoom to $130 before settling to around $106 today, translating into a $30 rise in crude prices in the past 5 months. The price freeze, according to ratings agency Moody's, has resulted in a 19,000 crore rupees loss for oil companies like Indian Oil, HPCL, BPCL, a part of which the companies hope to recover now that the political horizon is clear. A recent report by Kotak Institutional Equities said that oil marketing companies will need to raise diesel prices by 13.1 to 24.9 per litre and 10.6 to 22.3 a litre on petrol at an underlying crude price of $100 to $120 per barrel. On its part, Crystal Research has said that a rupees 9 to 12 per litre increase in retail price was required for a full pass-through of an average $100 per barrel crude oil and rupees 15 to 20 a litre hike if the average crude oil price rises to $110 to $120. Bureau Report, Business Today Television.
Let's take this straight across to Madan Sabnavis, Chief Economist, Bank of Baroda, who joins us on this special broadcast today. Thank you so much for taking the time out, sir. And let's begin with asking you the all-important question first. How much more do you expect the fuel prices to increase?
Actually, if you look at the way in which the crude oil price has increased since the last excise duty cut in November, we have seen it's gone up by around $30 to $40 per barrel. So something from 80 has now gone towards 110 to $120 per barrel. And intuitively, we can see that for every dollar increase in the price of crude oil, the actual cost as far as the refiners here are concerned increases by around 40 to 50 paise. Now, until the state elections were held, there was no increase in terms of the prices for the retail consumer. And therefore, it was expected largely that after the elections end, they would start increasing the prices. So, and the higher cost has been absorbed by the oil marketing companies so far. And there's a limit to which they could actually absorb the losses. So therefore, the government has decided to turn on the tap and start increasing the prices for the consumer. So that's what we are witnessing right now. So we have seen around 5-6 increases. It's being done almost on a daily basis, maybe around 80-90 paise per day. And I won't be surprised if it increases by around 10 to 12 rupees before the government again reconsiders what should be the future course of action.
All right. The CPI was already at an 8-month high of 6.07% in February. Where do you see the prices reaching after the fuel price rise?
So I think the price could be for example, I'm here in Mumbai and we were earlier paying something like 110 rupees per litre of petrol. I could see it moving towards the 120, 125 mark. That is assuming that the international price of crude remains in this region of around 110 to $120 per barrel.
And do you see the crude price fluctuating internationally as well? What is your expectation going forward?
So in my opinion, the price will not go beyond 120, since it does look like that there could be some kind of a reconciliation taking place on the war front. Also, I think in terms of what the West can do in terms of sanctions is already known. There's no fresh action expected. So I would tend to believe that 100, 110 is where the price of crude oil could settle maybe in the next couple of weeks.
You said the oil manufacturing companies are passing on the price increases to the end, absorbing rather the price increases as well and making it easier for the end consumer. Now, will all the other sectors or industries be able to pass on the rising cost to the consumer?
So if you're talking in terms of other prices, so if you're talking of things like metals, I think that's something which we've already seen prices being passed on to the companies. So that is something which will probably carry on, and we'll see almost all items which have been affected on account of this war in terms of global commodity prices moving up, also keep moving up. But in terms of pure, if you're looking at the energy products, I think there is there will be a tendency for even things like kerosene and LPG to go up, and unless the government is willing to subsidize to a larger extent, we could expect a final price to consumer pays to also increase.
With inflation crossing the comfort level, sir, set by the RBI itself, what is the interest rate scenario?
So in fact, the RBI has looked at an inflation rate of 4.5%. I'm quite sure there will be some revision when the policy is announced next week, when the NBC meets and the policy is announced. So one would tend to believe that the inflation will be probably in the region of around 5 to 6%. As we speak today, I think inflation is in the region of around 6%, just above the comfort level of the MPC, the band of 4 to 6%, which they spoke of. So therefore, there is quite a bit of pressure on the MPC to really react and do something on interest rates. But in my view, the RBI may not change the repo rate right now. It'll be more a case of looking at changing the stance of monetary policy from accommodative to neutral before it actually increases rates, maybe in the next policy. Because the view which has to be taken is that will inflation continue to keep increasing, or will there be a bit of moderation once the crude oil price settles at an equilibrium level?
All right, Mr. Sabnavis, thank you so much for taking the time out. Appreciate you joining us on this broadcast. The markets logged in gains for second straight day. Firm global mood, fall in crude oil prices and peace talks between Russia and Ukraine lifted the investor sentiment. Sensex rallied 350 points to shut shop, some points shy of the 58,000 mark. Nifty gained 100 points to close above the 17,300 mark for the first time in a week. Cement and pharma stocks were in focus today. Cement stocks were buzzing in trade on hopes of a price hike in April. Pharma stocks rose as regulator allowed hike in drug prices. Nifty Financial Services too snapped two-day losing streak to post the best day in 10 days. On the other hand, you had the PSU stocks that took a bit of a beating in trade today. ONGC, Coal India, Indian Oil, ITC were amongst the worst impacted in the intraday trading session. Hero Motocorp was the top nifty loser after reports suggested that IT department found bogus claims of over 1,000 crore rupees. And Hero Motocorp shares tanked in the trading session today and shut shop almost 7% lower. This after reports said that the income tax searches conducted last week revealed over 1,000 crore rupees bogus expenses. The IT department is also said to have discovered over 100 crore rupees in cash transactions from a farmhouse in Delhi. Hero Motocorp has denied these claims, saying the allegations were not born out of any document that was served on them or their internal documents. In an unprecedented move, capital markets regulator SEBI has given investors the option to withdraw from the Ruchi Soya FPO. Investors have till Wednesday to pull out their investments from the Patanjali Ayurved subsidiary. And this is not the first time that Baba Ramdev has run afoul of the SEBI.
तो मैं अब भारत के कम से कम 4-5 करोड़ भारतवासियों को करोड़पति बनाना चाहता हूं, पतंजलि और रुचि सोया से जोड़ करके.
This was last year September, when the Ruchi Soya public issue was still a pipe dream, still in queue for SEBI approval. But Baba Ramdev, the consummate salesman, would not stop hard selling the FPO to his yoga followers, promising to make them crorepati's, assuring he would take care of their financial health as well.
जो पतंजलि में रुचि सोया में इन्वेस्ट करेगा उसको करोड़पति होने से कोई नहीं रोक सकता. ये मैं आज आपको सुबह-सुबह गारंटी दे देता.
The crorepati mantra did not go down too well with the capital markets regulator. However, the yoga guru got away with merely a rap on the knuckles, with SEBI issuing just a warning to Ruchi Soya. The latest incident has managed to evoke enough SEBI wrath that the regulator prescribed a bitter pill to Patanjali. SEBI late Monday allowed retail investors who subscribed to the Ruchi Soya FPO to withdraw their funds. They have been given time till 30th of the March. The FPO was not too popular with small investors. Its retail portion failed to subscribe fully. It was this message that SEBI took umbrage to. The regulator objected to the circulation of the unsolicited SMS advertising the issue. It was allegedly being sent to Patanjali Ayurved users, recommending that they invest in public issue. Meanwhile, Ruchi Soya has denied it was behind the messages and has filed an FIR to have the matter investigated. Bureau Report, Business Today Television.
The central government has roped in DRDO to probe the fires in electric two-wheelers manufactured by Ola and Okinawa. The Centre for Fire Explosive and Environment Safety will investigate the fire incidents which grabbed headlines last week. We're now joined by Chetan Bhutani. Chetan, the government seems to have taken a serious note of these incidents. What are you learning from your sources at the moment?
Well, you know what we have understood from the source, from our central government sources, the fact that in fact days after a serious fire incident was reported from Okinawa scooters and Ola electric scooters, the government has immediately stepped in, and the Ola S1 Pro, which caught fire in Dhanora district in Pune, and of course the Okinawa scooter which caught fire in Vellore in Tamil Nadu, the government has stepped in and has asked the Centre for Fire Explosive and Environment Safety, CFEES, which is the arm of the DRDO, Defence Research and Development Organization, a Ministry of Defence subsidiary, to investigate and initiate and understand and examine the cause of the fire. Well, they have been asked to submit the report as soon as possible, and according to the order directive that has been reviewed by BTTV, the Minister of Road Transport and Highways has also asked the centre for submitting the reasons and the possible causes, and of course the remedial measures that can be taken to avoid such incidents in the near future. So definitely in times to come we can expect that these cases would be reduced. But yes, the government is clearly walking the tightrope with respect to Ola Electric and the Okinawa scooter fire incident.
Thanks, Chetan, for joining us with those updates right there. It's time now for a very short commercial break here on the Business Today show. See you in just about a bit with all the latest.
Are masks a burden? Should masks be done away with? Is it doing little to prevent transmission since there is no transmission now? Well, almost none. That is an opinion, a controversial one albeit. Is it the time to do away with masks altogether, at least for the time being, and revise the guidelines when things change in terms of an increase in cases? The Government of India says no, not wearing masks should not be an option. But some experts believe there has to be a more granular and nuanced strategy.
We know that masks prevent from transmission of the COVID-19 virus or SARS-CoV-2 virus. When the transmission itself is low, what the mask would prevent? So we know that in India, where the number of COVID-19 cases, daily COVID-19 cases are 1 or 2 per million, the benefit of mask is really limited. And then you can optimize the benefit by providing or recommending masks to those populations which are at higher risk. So I reiterate that it is the time India should reconsider the mask-related guidelines. The individuals who are fully vaccinated in the healthy age group, if they are in open space, or rather all population in the open outdoor space, may not need to wear masks at the current low rate of transmission. But if there's a setting where there's a high transmission going on,
mask itself to the community, I'm talking about the large segment of the population who have no interest or knowledge of science, and for them, disappearance of a mask equals the end of the pandemic, unfortunately. And that's the way the common man is going to look at it. They're going to say, okay, the government has said, okay, no more masks, which means the risk is over. So that can translate into extraordinary levels of high-risk behavior. And that can drive transmission.
Some experts say the fact that people are fed up of wearing the mask can't be ignored. Others say relaxing these rules may mislead. Also, many experts and parents say that with the current low level of SARS-CoV-2 transmission and based upon scientific and epidemiological evidence, the face mask mandates or the government recommendations on face masks for children at least between the age of 5 to 12.
Welcome back and thank you for staying with us right here in our Business Today TV exclusive. Even as trade unions protest disinvestment and other steps by the government, the centre is now looking to expedite sale of non-strategic PSUs. Highly placed sources have told Business Today TV that the Department of Public Enterprises is in the process of identifying non-strategic central public sector undertakings either for closure or privatisation. Karishma Sudani now joins us. She's getting us these exclusive details. Karishma, what are you picking up from your sources at this point?
Well, Chethi, it looks like it's an action back for the disinvestment of public sector enterprises, and Finance Ministry sources tell us that this time the focus is going to be on the non-strategic sectors where the government is looking seriously to either privatize or shut down most of them, because like they've been saying, the government should not be in the business of running companies. So we are picking up that DPE, that is Department of Public Enterprises, along with Niti Aayog, DIPAM and Department of Expenditure are shortlisting a final list of CPSEs that they will be putting on sale or, of course, executing a closure with the help of cabinet in principle approval. And besides that, the government, of course, is now also looking at expediting sale of other core assets from the strategic sectors like that of BPCL, Concor and Shipping Corporation, which have been waiting some kind of positive sentiments from the markets. 65,000 crore disinvestment target for FY 2023 looks very much hopeful. In fact, it could be beyond the estimated target that government could collect money.
All right, so a doable target right there. 65,000 crores is what we're looking at the moment. Thanks so much, Karishma, for that exclusive story. Come April, the gains you have been incurring from trading in cryptos will be taxed. Crypto gains will be taxed at a flat rate of 30% from 1st of April. How is it going to impact you as an investor, and should you keep in mind while investing in crypto from April? Sakshi Batra is here to tell us all you need to know about the crypto tax regime. Sakshi, take it away.
Well, that's right. Come April, we will see cryptocurrencies and virtual digital assets attract a flat 30% tax. And therefore, tax experts believe that if somebody is sitting on a good amount of profit on their virtual digital assets and may not have a very long-term view, then you may have an option of reducing your tax liability on the gains or profits on the cryptocurrencies front till March 31st, 2022. So how is that? Tax experts believe that till March 31st, taxes on gains of cryptocurrencies will be taxed at just like how normal provisions are on gold. Say, for example, if the holding period that you have your cryptocurrencies of is more than 36 months, then the tax liability comes under LTCG or the long-term capital gains tax, which is 20% post-indexation. If it is below 36 months of holding period, then you may have to incur a short-term capital gains tax. That depends on the income tax slab that you fall under, which is 0 to 30%. Another important bit is that Finance Ministry and the Finance Bill has detailed that come April, none of the losses on virtual digital assets will be allowed to be offset against profits on other virtual digital assets. So that benefit also exists till 31st March of 2022. Of course, the Finance Minister has also said in the budget that all transactions of cryptocurrencies and virtual digital assets will also attract a 1% TDS, although this will be effective from 1st July of 2022.
All right, Sakshi, thanks so much for joining us with those details right there. Let's now take a look at what else is making news in the corporate world. Private sector banks, Axis and HDFC Bank have signed agreements to acquire 15% stake each in India Debt Resolution Company Limited, IDRCL. Both banks announced that their first tranche of equity investment of 3 crore rupees each is expected to be completed by 31st March 2022. The Finance Ministry has informed Rajya Sabha that the government has not completed the process of due diligence of Bharat Petroleum Corporation Limited or BPCL. Transaction advisors will be inviting financial bids only after their due diligence is completed ahead of the proposed disinvestment. Larsen & Toubro, Smart World and Communication and Vodafone Idea Limited have announced that they will together establish a private LTE enterprise network in India. The companies have partnered to use 5G use cases for public safety. Smart and connected health is a part of the government's 5G trials. Noida-headquartered B2B edtech startup Class Plus has raised $70 million in Series D funding round led by Tiger Global and Alpha Wave Global at nearly a $600 million valuation. The fresh funding comes nearly 8 months after Class Plus raised $65 million in June 2021. FedEx has appointed Indian-American Raj Subramaniam as the new Chief Executive Officer of the U.S. multinational courier delivery giant. Subramaniam would replace Frederick Smith, who will step down from his position on June 1. Raj Subramaniam will serve as both the CEO and President, and Smith will become the Executive Chairman. Subramaniam joined FedEx in 1991 and was elected to the FedEx Board of Directors in 2020. He will be maintaining his seat on the board. Originally from Trivandrum, he holds a bachelor's degree in chemical engineering from IIT Bombay, a master's degree in chemical engineering from Syracuse University, and an MBA from the University of Texas at Austin. Well, that's it from me, Chaiti Narula. Thanks so much for being with us right here on the Business Today show. Thanks for watching. Have a great day.
Standard board exams don't matter anymore. Yes, you heard that right, and students can't be happier. The government has announced a common entrance test across central universities to determine college admissions. The University Grants Commission, which maintains standards of higher education in Indian universities, introduced the Central Universities Common Entrance Test, abbreviated as CUCET. This test is now mandatory for undergraduates to take admission in any of the central universities in India.
UGC ने decide किया आगे admissions के लिए 2022-23 admissions UG admissions के लिए सभी central universities में हम CUET को compulsory किया. ये एग्ज़ाम हम फर्स्ट वीक ऑफ जुलाई में कंडक्ट करेंगे और इसका एप्लीकेशन प्रोसेस अप्रैल फर्स्ट वीक में शुरू होगा.
The syllabus will be based on the CBSE Class 12 curriculum. There will be 27 domain-specific subjects from which students can choose up to 6. CUCET is a computerized exam. It will be held in online or CBT mode with multiple choice questions. It will at most be a 3-hour exam and will be held in 2 shifts. It will be conducted by the National Testing Agency in 13 different languages.
Students can write this computer-based test in their own language. हम 13 languages में ये टेस्ट को हम कंडक्ट करेंगे और इसमें 2 सेशंस होंगे. एक सेशन में लैंग्वेज पेपर लिखना है और 2 डोमेन स्पेसिफिक पेपर्स लिख सकते हैं और एक जनरल पेपर भी लिख सकते हैं चाहिए तो. और दूसरा सेशन में 4 डोमेन पेपर्स को लिख सकते हैं और एक फॉरेन लैंग्वेजेस को भी लिख सकते हैं.
Class 12 marks will not help you get admissions in college, but Class 12 marks will be used as an eligibility criterion. The candidates must have cleared Class 12 to appear for CUCET. That's all.
You are watching India Today.